Welcome to InvestoSphere, the place where your financial freedom journey begins. Today, we are diving deep into one of the most reliable and time-tested ways to build wealth passively through dividend stocks. If you've ever dreamed of earning money while you sleep, enjoying steady income without selling your investments, or retiring early without worrying about monthly bills, this guide is your starting point. This is not just another beginner's guide. This is the ultimate no-nonsense roadmap to creating passive income with dividend stocks, even if you're starting from zero. In this video, we are not going to overwhelm you with complex financial jargon. Instead, we will walk you through everything in a friendly, practical, and easy-to-follow format. We will explore what dividend stocks are, how they work, how to choose the best ones, and how to build a sustainable, passive income portfolio that pays you for years to come. So, grab a notepad, stay with us until the end, and let's unlock the power of passive income with dividend investing. Number 1. Understanding dividend stocks. Let's begin with the basics. What exactly are dividend stocks? Simply put, these are shares of companies that return a portion of their earnings to shareholders, typically on a quarterly basis. This payout is known as a dividend. Think of it as your reward for being a part owner of a company. Dividends come in two main forms: cash dividends and stock dividends. Most commonly, investors receive cash, which gets deposited into your brokerage account. Why do companies pay dividends? Because they are profitable and stable. They want to attract long-term investors by sharing profits instead of reinvesting everything back into the business. Now, here's the beauty of dividend investing. You can build a portfolio that pays you consistent income, regardless of market fluctuations. While the stock price may go up or down, those dividend payments can keep coming in. Number 2, how dividend income becomes passive income. Many people ask, how is this passive income? Don't I need to keep buying and selling stocks? The answer is no. Once you purchase quality dividend stocks, your job is largely done. These companies will continue to operate, earn profits, and send you a share of those profits in the form of dividends. With proper portfolio management, reinvestment strategies, and time, your dividend income can grow significantly through compounding. For example, if you invest in a stock that pays a 4% dividend yield and you reinvest the dividends, your money starts working for you. Over time, that compounding effect becomes incredibly powerful. Number 3, key terms every dividend investor should know. Let's break down some basic yet essential terms. Dividend yield. This is the annual dividend payment divided by the stock's current price. It tells you how much income you're earning relative to the stock price. Dividend payout ratio. This is the percentage of earnings paid out as dividends. A lower ratio usually means the dividend is sustainable. Ex-dividend date. If you buy the stock on or after this date, you won't receive the next dividend payment. DRIP, dividend reinvestment plan. This allows you to automatically reinvest dividends into more shares. Understanding these terms is crucial for making informed decisions and building a smart income portfolio. Number 4, choosing the right dividend stocks. Now let's talk strategy. Not all dividend stocks are created equal. Some are consistent performers. Others are riskier and might cut their dividends during tough times. Here's what to look for. Stable and growing companies. Focus on companies with strong balance sheets, consistent revenue, and long-term growth prospects. Dividend growth history. Look for companies that have a track record of increasing their dividends annually. Reasonable dividend yield. A very high yield might be a red flag. Aim for sustainable yields. Payout ratio under control. Avoid companies that are paying out more than they earn. Industry leaders. Choose companies that dominate their sector and have reliable cash flow. Some classic dividend stocks include Johnson & Johnson, Procter & Gamble, Coca-Cola, and utilities like Duke Energy. Number 5, building your dividend portfolio. When building your portfolio, diversification is key. You want to spread your investments across different sectors like healthcare, utilities, consumer goods, and technology. You can start with individual stocks or use dividend-focused ETFs, such as Vanguard Dividend Appreciation ETF, VIG, Schwab U.S. Dividend Equity ETF, SCHD, SPDR S&P Dividend ETF SDY. Start small, be consistent, and reinvest dividends. Number 6. Tax considerations in retirement accounts. Understanding taxes can help you keep more of your passive income. Dividends and taxable accounts may be subject to federal income tax. However, if you hold dividend stocks in tax-advantaged accounts like a Roth IRA or traditional IRA, you can defer or even avoid taxes altogether. Qualified dividends are taxed at a lower rate than ordinary income. Be sure to consult a tax professional to optimize your strategy. Number 7. The power of reinvesting dividends. Reinvesting dividends is where the magic happens. Through drips or manual reinvestment, every dividend payment buys more shares. More shares mean more dividends, creating a snowball effect. This strategy can dramatically increase your long-term wealth, especially if you start early and stay consistent. Number 8. Tracking and managing your portfolio. Keep an eye on your portfolio regularly, but don't obsess over daily fluctuations. Use tools like Personal Capital, Yahoo Finance, Seeking Alpha. These platforms help you track dividend income, monitor performance, and adjust when necessary. Set a calendar to review your portfolio quarterly. Focus on income growth, not just stock prices. Mistakes to avoid. Avoid these common pitfalls. Chasing high yield without checking fundamentals. Ignoring diversification. Overreacting to short-term market swings. Not reinvesting dividends. Failing to research a company's financials and dividend history. Smart investing is about patience, research, and staying consistent over time. Realistic expectations and long-term vision. Dividend investing is not a get-rich-quick scheme. It takes time to see substantial income, especially if you're starting small. But with consistency and discipline, you can create a dependable income stream that supports your lifestyle or retirement. Many people have retired early or supplemented their income using this strategy. It works, but only if you stick to the process. So, there you have it, a complete beginner's guide to earning passive income with dividend stocks. We covered everything from understanding dividends to choosing the right stocks, building a strong portfolio, managing your income, reinvesting wisely, and avoiding costly mistakes. The goal isn't just to earn money, it's to create financial freedom and peace of mind. If you found this guide helpful, please support our channel by subscribing to InvestoSphere. It takes just a second for you, but it means the world to us and helps us continue bringing you valuable content. Like the video, share it with someone who needs to hear this, and leave a comment below telling us, what's your favorite dividend stock and how are you planning to use passive income in your life? Your feedback helps us improve, and your journey inspires others. Thank you for being part of the InvestoSphere community. See you in the next video.